on the charts.
The market is open.
AVS, it's good to see you as well. Joint statement tomorrow. All right, Ricky, thank you very much. Yeah, thank you. Hard to do 4 things at once here. Bill Ackman has the bet on Hertz. Interesting to see how that goes. Let's go. Some good info there. All right, let's see on the open. Hey, Will. Black Swan, it's good to see you. Gaps everywhere. Yep. Gap just gapped up. Crazy. All right, so we are open. Wow, look at that. S&Ps. Boy, that equilibrium was showing a gap, and it's a bigger gap than we expected. So we have opened above the weekly kickoff high in the S&Ps. 5750 is the weekly kickoff high in the S&Ps. It was a naked point of control. The market, we're just gonna go into the charts now. So I want to start with the daily in the S&Ps. So the market all last week was basically inside the previous Friday's range. Most of it, right? We looked above it. We looked below it. We closed inside of it. Friday was an inside day. It was going to take some new information or something to change this market from a range-bound short time frame range to a potential breakout and continuation. There is a lot of positivity coming out from this alleged or
order filled
agreement between the U.S. and China as far as tariffs are concerned. So weekly kickoff high, what does it mean? Well, when we look at the high from last week, 57.41, and yes, if you have the top step levels up, you can put them on there. You'll see. Okay, so last week's high is 57.41, 57.41. I've got a little bit different than that. Weekly kickoff high, 57.40. Oh, no, 57.41. No, that's about right. So yeah, you can put those on there. I'm going to take them off because I'm just trying to make the charts a little bit more clear, if you will. All right. So the range bound activity that we had last week followed a really strong trend to the upside. Trends don't go on forever. You need pullbacks, you need consolidations, and we got our consolidation in these equities last week. If we continue to see or hear good news about these tariffs, if some deals start getting made, you can bet that the longer time frame is going to begin to get squeezed. They're going to start to feel like they are underperforming on the way to the upside, and they will adjust their inventories. What does that mean? Well, the longer time frames, the banks, the big traders, the big people out there, they are the ones that really move these markets, but they're never just outright naked long, naked short. They're adjusting inventories against other products. If they are not long stocks enough and stocks start to rally, one of the quickest and cheapest ways they can participate in that is buying futures. So we're going to see if we start to see them coming in. Just looking at this market on the open, we're above that weekly kickoff high. It seems to be at least holding relatively well so far today. Let's look at the 30-minute chart and see what we're looking at on that. So we've broken out above last week's high. We are in an area that I believe longer time frame is going to take notice. Are they going to take notice now? I doubt it. They're usually not going to be all that active in the overnight session. Now, this is a 30-minute chart. We've opened above an important inflection level. In my view, it's an important inflection level. This is not financial advice. These are levels that I believe will cause longer time frame traders to take notice and adjust inventory. But I don't think they're going to be doing that tonight. What we're going to see tonight is shorter time frame speculators, weaker hands traders, just looking for a reason to get into something, right? So
Order filled.
that's pretty much why I don't trade a lot in the overnight session. Some people are really good at it. I've never really tried that much. Maybe I should, but I do got to get a little bit of time away sometimes. So gap to the upside. If we don't close the gap relatively early, then we're looking for opportunities for continuation. We're already falling back below that weekly kickoff level, and the longer time frame traders are the ones that I'm looking for in a reaction around the weekly kickoff level. It doesn't frighten me or scare me that the overnight traders are ignoring that level. Going back to the daily chart, we were looking at a range-bound market for the last week. Range-bound to breakout rules apply. If the market breaks out above and we see volume, we see momentum, we see participation, we see open interest increasing, that's what we want to see continuation in the move to the upside. If the market fails up here, that's going to mark a possible rejection of this higher price, can bring us back into range and keep us rotational for a period of time. Again, ACH, man, anything can happen. We can have 5 deals signed in and with China by tomorrow morning. Who knows what's going to happen? But technically what we're looking at is a potential breakout from balance. If the breakout continues, you've got to go with it. If the breakout fails, you've got to fade it. You got to fade it back into the range. So let's take a look here again at the profiles. I mean, it was really a mixed bag all week last week. This was Monday, Tuesday, Wednesday, Thursday, Friday. Very range bound. We did take care of a lot of weaknesses in structure in that area, naked points control, all of that. So it's part of the reason why I tightened up the weekly kickoff high so much, because if we do see some continuation and participation above that weekly kickoff high, last week's high, which is 57.41, remember all of these levels are zones. There's nothing finite in futures trading. Watch and see what happens. I mean, we're already seeing some continuation of the downside here off this open. Boom. Sellers coming in. Probably going to see if we can't go down and check and close the gap. Maybe a move back down to settlement. Settlement all the way down here at 56.78, if that is correct. I'm going to double check here. Yeah, it's 56.78. That is correct. Last week's high, also kind of an important inflection level. When I say an inflection level, it's really just a reference level. It's something that we've seen from the past. It's a level that has been visited and rejected. It is a previous high, previous low, weekly high, weekly low, kickoff level, initial balance. Those are all reference levels, and they do offer sometimes opportunity in the right context. When the market is in the right context, there's opportunity there, and at the very least, there's opportunity to limit risk when we're looking at reference levels. All right, enough monkeying around with the S&Ps. Let's look at the Nasdaq. Now, you all know me. I'm not a Nasdaq trader. It gives me heart palpitations, but we're going to take a look at this for all of you, and it is really in a very, very similar situation to the S&Ps. We've got, okay. So range last week, very range bound last week. Let me make sure everything's going okay here. And very range bound last week. And with new information, we are seeing the market open at weekly kickoff high, 20,400. And again, there's reason why it was tightened up, because this is a short time frame breakout. Short time frame breakout may be enough with some new information to push longer time frame traders into this market. I'm looking at squeezing them into buying buying S&Ps, buying stocks, buying Nasdaq. We're going to see if that happens, right? ACH, baby, ACH. Again, we open interest was pretty much flat on Friday, which is kind of what this looks like. It was pretty much just a doji, very indecisive day on Friday, relatively low volume on Friday. It was a typical Friday, I thought. Let's take a look at the 30-minute chart now. So here is our weekend gap. We've opened with a gap above last week's high, above the range from Friday. And again, at an important inflection level is the way I see them, 20,400. If we can't pull back and reaccept below that level, then we may be accepting prices at higher levels. This is a little bit different than we were just looking at on the S&Ps. We'll go back and take a look at that here in just a second. So a little bit of good news and see what happens. Even if there's no bad news, these equities markets are so resilient. They just have this natural lift to them. Why? Well, because 80% of the stock eating public only trades it from the buy side. Only trades it from the buy side. All right. So there's a question here about if thank you, Cajun. I will tell my wife that. Thank you very much. We just got a nice one of her favorite meals cooking. I can smell it now. So as soon as we're done with this, we'll go have our Mother's Day celebration. But Phenom, do you ever glean any information from the weekly volume profile, or do you mostly just look at daily TPOs? Mostly just daily TPOs. There are occasions like range bound trades. If it's a long time frame range, I might look at at a composite profile for that time. But I can kind of see, looking at the charts in longer time frame, where I believe value is, where the point of control would be, something like that. So, and I do like the TPO charts because I can glean so much more information out of a TPO chart than I can out of a volume profile. There's just so much more detail to it, and we can talk more about that as time goes on here. Phenom, thank you for the question again. Cajun, thank you. Hey, Andrew just requested his first payout. Nice. Hey, money's money, man. Good job. Good job. I'm happy for you. That's great. So Rebel, how can I see the open interest on ES? Is there an indicator for that, John? Some platforms will have open interest on the. It looks like I'm having a little bit of internet issues here, perhaps. Okay. All right. Some platforms will have open interest on the quote board. It's something you can add to it. But I look at this, which is from the exchange. Hang on a second here. Which is from the exchange, and I will get you the link here. Oh, here we go. Hang on. And I'll show you how I collect it.
Order filled.
All right. Daily bulletin. Okay, so here is the daily bulletin. I'm going to put
Order filled.
this link into the YouTube chat. Okay, so there's the link, and this is what you're going to see. Daily bulletin. Okay. A little bit of a lag going here, I think. So here's the daily bulletin, and there's different places you can find it on the CME website, but you can go down here and you can see, all right, equities, equity and index futures. If I click on that, it's going to give me the equities, Nasdaq, S&P, Nikkei, Dow. It's going to give me all of those. Okay, so when I look at this, when I'm collecting information involving open interest, I can look at the front month. Okay, there's 1,024,361 in the front month. I'm sorry, open interest, 2,068,000 in open interest. But overall, there's 2,120,000. So I collect the bottom numbers in volume and in open interest for the studies that I do using open interest and volume. So let's say you're trading crude. There's your crude energy futures products, CL, the first one. And look at how many contracts are out in the future here. I mean, we're looking at December of 27. There's already 62,500 in open interest there. So when I look at this, I want to see how open interest has changed throughout all of the products. So I look at the bottom. We got 1,976,947. It rose by 1,956 the previous day. Okay. All right. Hang on a second here. Live. All right. Okay. So that's where you find it. And if you're trading currencies, FX, metals. Here you got gold. It's about the third page. Gold, open interest, the total open interest, the total volume, the net change in open interest. And those are the kind of tools that I look at, and I collect that information pretty much daily, because sometimes, not all the time, by a long stretch, but sometimes you can get some really valuable information in there. Greg Sticks, we're working on it. We're working on getting a lot of things done on the platform. It's taking a long time, but there's so much that we want to add to it, and we're doing the best we can. And we're working on it. I know it's kind of hard, but to kind of think about living without it. I'm actually having trouble with one of my other platforms. I'm not getting profiles. I'm not getting Delta. I mean, I just have to hope that this fixes itself by the open tomorrow. All right. So, Nasdaq range, seeing maybe some continuation above this weekly kickoff high. If we can't close this gap relatively early tomorrow in the session, then we might be looking for some continuation. And again, any good news is going to create that opportunity for buyers to come back into this market. So red bar on the 30, green bar on the 30, a little bit of difference, but really just kind of hanging in the same area of the chart. Very, very kind of in step markets. Even the S&P and the Nasdaq have been lately. They're not always, but they have been lately. Let's take a quick look at crude oil now. Crude. All right, here's the daily. Excess low. Really kind of in a big area of range right now. We saw a breakout above a shorter time frame range on Friday on low volume, and a decrease or an increase of approximately 1,900 in open interest. Not big, but still, a pretty decent look. What do range bound markets do? They put in a low, they put in a high, they check the low, they check the high. We do have the weekly kickoff level remaining the same as last week, because you've got a couple of relatively distinct areas of balance in the past here. You've got the area of balance that's largely below this $61.90, $62 level. And then you've got another area of balance distinctly above that level. Now we've got another area of potential balance distinctly below that level. So I'm looking at that as somewhat of a pivotal level. If we can see some continuation above it, that we could recover. If we can't hold above it, technically, I think then we just kind of fall back into this lower area of range. One thing that I want to mention again about that open interest, if I can, is when you start reading this and looking at it, you'll notice this is Friday's information, but this says preliminary on it. It won't be until 9:30, 10 o'clock tomorrow where it will say final. And once it's final, that is going to be the actual open interest numbers. Why does it take the exchange that much time to calculate the outstanding number of contracts? It just does. It just does. It is a complicated thing. When we're looking at contracts, we're looking at one long and one short. One long and one short is one contract. But to be able to calculate all of that obviously takes the exchange a little bit of time. So if you're going to be collecting this information and using it moving forward, make sure you can kind of look at the preliminary number and trust it a little bit. Sometimes they can be pretty far off. But when you're collecting the numbers for posterity or for yourself, whatever it is, make sure you wait and just refresh. And then once it says final, that's going to be the actual number. The volume is easy to calculate. Settlement, easy to calculate, easy to post on this. The most difficult thing to calculate is that open interest. All right. So make sure if you're collecting it for, a long period of time, make sure you get the final numbers, the final
order filled,
final open interest numbers. Okay. What's up, Pistol Pete? Of course, Greg Sticks. Of course, I'm going to be having some more shorter, kind of content coming out. Going to have a little 5 or 10 minute thing about open interest. We're going to have a 5 or 10 minute thing about zero sum game. We're going to be putting out a whole bunch more stuff here. So hopefully you're going to find it useful. Okay. Are they government workers? I don't know. My back hurts. All right. So, let's look at the 30-minute here on crude. It's all about context, good risk management, and patience. Context, good risk management, and patience. Context, good risk management, and patience. Balance. Upper extreme of balance. What do we add? 2,900. I would say on Friday, the move in the morning was to the upside on high volume, but this grind to the upside that happened throughout the day, I would say, is probably more new longs coming in. We have to remember that crude oil is in rollover. Now, if we were to look at the open interest in crude oil for this rollover, let's take a look. So here we are. I'm going to make this really big so we can see. Oh, hang on. All right. So this is the open interest, 201,361 in the June contract. The July contract already has more open interest, 280,670. Volume, however, still remains in the June contract. We're going to trade the June contract until the volume in the July contract usurps the volume in the June contract. It will happen at some time this week, maybe Wednesday. What's the what's the date today? 11th, 12th. It's maybe a little bit early for it to roll, but we don't choose that. The people that are rolling these contracts choose that. So we're already higher open interest, but higher volume still in the June contract. So when rollover comes, there is the probability or at least the potential for the market to remain range bound. Why? The big traders, the hedgers that use this contract to hedge their businesses are probably holding a lot of contracts. Okay. So let's say I have 10,000 contracts in the June contract, and I have to roll them into future months. I can do it with a spread or I can leg it. The point being is it takes a lot of my focus away from directional activity into getting a cheap rollover or making money on the rollover. You can make money, you can lose money, or you can do an even rollover. But when we're talking about 10,000 contracts at $10 a tick, we're talking about $100,000 a tick. If I screw something up during rollover, the boss ain't going to be too happy with me. So it takes a lot of the focus away from it. Now, here's the rollover range from last rollover here. Then we came up here and ranged. Now we're kind of back in that rollover range that we were in last rollover. So to me, crude oil has been a tough market to trade. We've been we were successful on it this week 4 days in a row because the opening range was left at the extremes 4 days in a row. This yellow line right here is the first minute of trade on Tuesday, and it ended up being the dead low of the entire session. This line here is the opening range on Wednesday. It ends up being the dead high of the regular trading hour session, and the market continues to push lower. Thursday, opening range, the first minute, ends up being the low of the regular trading hour session range, and the market continues to push higher. And on Friday, the opposite again, opening range, the dead ass high. We held that short as long as we could. Once we had this failed downside auction, we said, that's it, we're out. Turned out to be the right thing to do. So we've been, able to trade a mechanical strategy and profit 4 days in a row in crude oil. And it's not a market that I trade very often. I think it's been a very tough market to trade, but just that understanding that if the opening range is going to be one extreme or the other, you've got big potential for good reward over risk trades. 3, 4, 5, 6, 7 to 1 reward over risk trades. Not always. And, we do get ticked out. I mean, it's a low probability trade, but 4 days in a row, it was hot for crude oil. And I think, overall we were 0 for how many in gold, and, 4 for 5 in crude oil.
Order
and
filled.
I think the house account made, I don't know, about $1,000, maybe a little bit more from the opening range trade last week. Last month, we made $3,000 just trading one lots. And so, I mean, it's kind of an example of how, if you catch a good opening range trade, you don't know how far it can go. Let's take a quick look at gold, and then we're going to see if there's any, kind of last questions, and then we'll go get ready for Mother's Day. And again, I hope everybody has a wonderful Mother's Day. Look at what happens when Mother's Day lands on a full moon. My goodness. And we all know what that means. I don't know what that means, but so we had some pretty good volatility. We had a pretty good break from the highs, or the recent highs here in gold. We had that island top. We'll look at that shortly. What did we do as far as open interest is concerned? I've got a sheet here where I can tell you we've been losing open interest in gold since Wednesday. Losing open interest in gold. What does that tell me? We added a little bit of open interest in gold on Friday, but that was kind of an up day. Losing open interest on a down day means long liquidation. This is not new selling coming in. If we're going to look at this, let's look at the weekly chart. So here's the rally this year. We're range bound. It's not like this market has drastically changed market state from an uptrend to a downtrend. It's uptrend to range. The market needs to range or pull back. It gets too long, shorter time frame traders won't buy it anymore, and you get the pullbacks. I think we're just in a pullback here. I'm not looking at this market like we're going to be selling it from this point moving forward. I think that there's still potentially a lot of good upside potential in this market. Well, why? All-time high was in an overnight session. Recent high was in an overnight session, but that island top still remains. So let's look at this with the regular trading hour session only, and it's a little bit strange because this does hold on to a little past the regular trading hours, and regular trading hours in gold are 7:20 to 12:30. It settles at 12:30, and that freaks out a lot of people when something happens after 12:30 and price moves drastically away from settlement. It's like, how do they settle it there? Well, because they still mark positions to the market at 12:30 settlement in gold. A little bit antique, a little bit strange perhaps, but all right. So let's see, Tuesday, Wednesday, Thursday, Friday. Okay, so Monday to Tuesday, session gap. Tuesday and Wednesday, inside day on Wednesday. Okay, now this doesn't necessarily show it because this goes beyond the settlement. So the market starts to crack, okay, until it closes, and then you could say technically that the market did close this gap because it traded down here in extended trading hours and traded back to it. But if this didn't have that extension on it, if this chart stopped at 12:30, we would still see this session gap, which creates an island top, a 2-day island top. All right, so a lot of speculation after this move on Tuesday last week that this was going to be a blow off top, and boy, it sure looks that way. So we had 2 days to the downside, nothing really all that big on Friday, but it was a repair day, and we didn't even repair the Thursday day. So if we look at this is the volume profile from regular trading hours only from Thursday. We have a distribution of volume at the top, low volume all the way till we get to near the end of the day, and we start to stack up volume here again. When the market opens between those two high volume nodes, the tendency is to trade to one or both of those high volume nodes, which gold did neither of. Now, we know that we've opened with a pretty significant gap to the downside. Is this going to change anything? Well, let's take a look. Extended trading hours. All right. So let's take a look and see this on the daily and see what it looks like. Has it changed anything in its current advertised price? No. I don't think that it has. I don't think that there's any major market state change here. We're still range bound. We start taking out last week's low, then we may be in a little bit of trouble. I think that the breaking point for a market state change from a trend to balance to trend to the downside starts somewhere around 3180, which is weekly kickoff low. There's a lot of weak structure down below in this market. Now, this is the 30-minute chart, and it's going to look like a whole bunch of garbage here. Well, probably because it is. Naked point of control, last week's low, gap, this week's weekly kickoff low, and an naked point of control, a gap with a naked point of control in it, a naked point of control, another gap, another naked point of control, another naked point of control. There is so much weak structure down below that if the market does head that way, it has plenty of visual targets. It has plenty of references to go back and recheck those levels. We got the weekend gap. We've got a session gap. We've got lots of gaps here. But again, I don't think that this market is broken. I think it's resting. I don't think it's dead. It's playing possum right now. It's playing possum. So, all right. Yeah. Okay. Slip Kid, hang on. Chauncey, do you find that all of the initial balances from overnight levels have significance in the New York
Order
session?
filled.
Yeah, I gotta say yes. But in the right context, there, Chauncey, there's times when things are going to work and times when they're not. There's nothing that works every time or provides a good level every time, and there's nothing that never works or gives a good level at that time. So, I mean, these are things, Chauncey, that would really tend to um, complicate things when I'm looking at market generated information in the regular trading hour session. But it's not to say that they're not important. It's not to say that they're not important. Slip Kid, do you look for difference between front month and future months to detect change in sentiment, short term and long term? Uh, it's it's technical information, but again, how often are you going to be able to notice something like that by watching the future months? I'm watching the future months to see when rollover is likely to come in. There's always backwardization and contango and all of that stuff. Um, do I find it, wildly useful? No. Seeing if there's any more good questions here. Yeah, pragmatic quant. I guess they do have timely settlement and open interest data now on a paid service. They moved everyone else on the delayed data feed, right? I just always, as a creature of habit, I'm always looking at those bulletins. They used to have them like, in stacks, as you walked on the trading floor, they would have that bulletin and on paper, and you'd grab it as you went in to take a look at your information. Roderick, yes, I do. I'm going to see if I can't figure that out for us this week. Well, thank you, Liam. We are very happy that you're enjoying things and that you're finding things useful. Dr. Curmudgeon. Oh, well, thank you very much. You guys are too kind. Bullet traders. Um, he's asking, when looking at multiple markets, how do you distinguish which market will likely have a better setup versus the others? It's all about context, bullet trader. The gold market was a market that had me back in January say this market is primed to go higher. So right at the beginning of January, we saw price increasing on higher open interest and negative delta. That says there's strong buyers in this market. They are getting the short time frame traders too short, and they're going to run it up. So just in seeing that, my interest peaked in gold from the beginning of the year, and it's been buy side only for me pretty much ever since. until we saw that island top. Now it's, I'm looking for rotation inside of this balance area. So I've been trading. I traded S&Ps for years and years and years, and there are periods of time when I don't like it. There are periods of time when I do like it. I think the focus for me this year has been more on gold than anything else, and I can't trade the Nasdaq. It just too whippy for me. It gives me heart palpitations. You're welcome, Slip Kid. Robert, nice to talk to you, kind of one on one. I know you've been around the pits. You're a profile guy, and the IB is not tradable, and in today's profile is irrelevant. Debatable. Debatable. We use it a lot, and even Dalton would agree with you, Robert. Even the writer of the book, Jim Dalton, would say, yeah, he doesn't really focus on the IB anymore, but it's just a reference level that I like to look at. So Robert saying ES buyers are in control. All right, we'll see. Vicky, I do not. During the Asian session, I'm usually asleep. All right. Awesome, Monica. Awesome. Well, I really appreciate everybody hanging out with me today. It's been a while since I've been kind of one on one with everybody, and it was a lot of fun. I really enjoyed it. And don't forget, it is Mother's Day. Call your mom. Blessings to all you moms out there. We'll see what tomorrow does. And remember, it's a full moon on Mother's Day, so whatever that means. Let's get down to it, folks. Love you too. Blessings to you all. Take a deep breath. Stay humble, grateful, creative, and centered in your trading. And we'll see you tomorrow morning, 7:20 on the opening call. Trade well today. Manage your risk. Stay patient. It's got a full week ahead of you to look for those good opportunities. Take those good trades. Look for the next good trade. And again, blessings to you all. Have a great night, everyone.